Australian Power and Gas is forecasting strong profit growth over the next 3 years, driven by new customer accounts. It's forecasting net profit after tax to increase to more than $20 million in 2013. That's up from an expected maiden result of $1.5 million in financial year 2010. Well, to talk us through this updated forecast, we're joined by the company's CEO, Jim Myatt. Jim, thanks so much for coming in. Just firstly, tell us about your new forecasts that you've released to the market today, updated forecast.
So the forecast we put out today is taking us down to the net profit after tax line. Previously we've just been talking mainly about the revenue side. As the business is now starting to move into its first year of fully cash flow and net profit after tax positive result, we thought it was an ideal time just to give the market and the shareholders a further looking forecast to see the growth potential of the company going forward.
Yeah, and you're predicting a quite amazing growth in customer accounts. What level are they at the moment? Where do you see them being by 2013?
Well, they're just over the 100,000 mark. We started in Victoria about February 2007, and we grow at about 4,000 net new accounts per month. So we have an exclusive relationship with the world's biggest direct sales organisation, which is the Cobra Group, and this allows us to grow customers at a very significant rate, which sees us as the fastest growing retailer in the energy market at the moment. So we would see those customer accounts growing in this forecast up to 300,000, and that's really just focused on the Victorian market. There's obviously some expansion opportunities moving into New South Wales and Queensland, where we could see the number of new accounts that we add each month growing, maybe tripling from where we are currently at the moment.
Pretty tough time to start up a new business though. I mean, how rough has it been?
It's been tough. It's been tough on the stock market side, and it's been tough on the debt side. The business has actually been fairly recession proof. Because we deal mainly in the residential markets, we've actually seen people staying home more, and because we offer people a genuine saving off their energy costs, we've actually seen people more receptive to the product offering. So our bad debts haven't really increased at all, and so we've actually been okay from the customer acquisition side. Yeah, the stock market's been tough, and that's why it's a good time now just to go out and emphasise that during the time that we've had in the last 18 months, now, you know, this is a really positive story going forward. I mean, this is a business that's grown from zero revenue in 2007 to we're forecasting 135 million of revenue in this financial year. So it's a strong growth result, very fast growth, and you know, we see some great potential going forward. Yeah,
during a global financial crisis as well. Just looking, I guess, at how you can sort of make a point of difference between yourselves and the bigger energy retailers out there.
Yep.
As a smaller and a very new entrant, how do you compete and be? I mean, can you offer cheaper prices?
We sure do. Our price is genuinely cheaper than the standing rates in the market.
How do you do that though and still make it a viable business?
We have a very efficient operation. We think that we can do things slightly different. We have a very low cost model, very highly variable cost model. So the big guys, we run with a fairly small staff, so we're sort of a lean, mean machine. Most of us have come from big organisations. We've come from some of the bigger energy retailers, and we've taken a lot of the fat out, and we run a pretty efficient style of model. So that's where we really work on trying to get the best advantage that we can and offer that as discounts to customers going forward.
I guess just looking as well, at the moment you mainly operate in Victoria, but obviously you've got licences to operate across the all down
whole
the
eastern seaboard. Yep.
So I mean, what are your plans for growth then?
Well, I think the main thing is just keeping the Victorian business growing solidly, and then as the markets open up more, as it becomes the governments here in New South Wales and Queensland are starting to review the tariffs that we can charge, and therefore the products that we can offer into the marketplace, I would say that looking into next calendar year, there's certainly strong opportunities for us to grow into those states as soon as the market conditions are right in those states.
Which states are you targeting? All of the ones you have licences in, or mainly?
The next targets will definitely be New South Wales and Queensland, the two next target states for us.
Obviously, you've got the proposed emissions trading scheme hanging over your head as well. What do you see that having an impact on your business? Because obviously, I mean, there have been recent reports that this is going to hit Victorians certainly the hardest, with the biggest rise in electricity prices. Reports that the average household gas and power bill could go up $7 a week under the ETS. I mean, how are you planning for something that hasn't actually been legislated yet?
Well, the business model that we have does plan for some increased costs as a consequence of a.
How much?
The model's allowing about $10 a tonne at the moment, going on from 2011, which is the mandated level. The retail model, though, it should be a pass-through. The retailer isn't exactly the model isn't for the retailer to absorb the cost. The cost is passed through from the generators to the consumer.
Yeah.
So in theory, the retailer shouldn't absorb any costs. So we're working pretty heavily with the state governments to make sure that they recognise those increased costs that are applied in the wholesale side of the business, so they'll pass it into the regulated tariffs for those states that still have regulated tariffs. In Victoria, there is an unregulated market, and so costs will be able to be passed through a lot more effectively to the consumers, where it should drive a change in consumer behaviour, which is what the scheme's designed to do.
Yeah, I mean, just looking, obviously, you, like most retailers, offer the greentricity, I think you call it, offer. What's the take-up of that like? Do you think customers will accept higher energy costs as a result of this ETS and that target for renewable energy sources to be, what, 20%?
Yeah, look, I think it's definitely going to be an increased cost base for people to deal with. We do sell 3 green products as well. The rates aren't that high. It is a premium product still in the market, where people do pay some premium for a green product as opposed to a discount. That is because the costs of renewable energy are higher, and part of the carbon pollution reduction scheme concept, as far as I understand, is to make sure that the green power or the renewable generators can compete on a more even basis for, say, the coal-fired generators, so that the cost should become a lot more even. So maybe we'll see a little bit more of a smaller difference between the costs of traditional energy supply and the renewable energy supply.
Really interesting story. It'd be great to have you back on. Jim Myatt from Australian Power and Gas. Thank you so much.
Thank you.